Hi, everybody. This is Doug Robertson from Top Gun Options, bringing you a video trade alert today. Just want to go over something I'm looking at in the market, a possibility for you to watch. What we're looking at is the Russian Market Vectors ETF. This is an ETF that comprises a bunch of Russian-based companies, and it's basically a proxy for the economy and things going on in Russia right now. Now, as we all know, or as you probably should know, there is an election going on. Vladimir Putin is going to try to be president of Russia again, and basically it looks like he just did that. Everything's pretty well settled. That's a done deal. Now, there was a lot of speculation that there'd be some very violent protests, some craziness going on in Russia. We got a little of that, and don't think that this is a completely clear political situation over there. It's not. But the amount of uncertainty and unrest that has come out of that has driven up the implied volatility in the options. Now, this is a clear case of what are you getting for a reward versus what kind of a risk are you taking? And the rewards in this particular trade are pretty good. So I'm willing to step up and take probably a little bit more aggressive, a little bit riskier of a trade than normal. But we're going to have to watch this. We're going to have to manage it. So what am I looking at about this? First of all, the RSX ETF itself does not actually move a heck of a lot. Yes, there was a gap, and that was an expected thing from the elections. We're not probably going to see a heck of a lot more of that. Even if it does, that's fine. But on a daily basis, this does not move a heck of a lot. The measured historical volatility is only 13% on this particular ETF. Right now, the implied volatility, the amount that we're getting paid to take this risk is 36%. Actually, on the particular trade, we're looking at closer to, I believe, a 32% implied volatility in the trades I'm actually taking. The key here, though, is that the implied volatility is significantly higher than the actual price movement exhibited by the stock, or in this case, an ETF. Now, we got to take into account a couple other things. What is the world situation? Well, we are dealing with a Russian stock here, and there is some political unrest over in Russia. But from a business point of view, Vladimir Putin is a good thing. Stability, pro-business, it's a stabilizing factor in their economy. That's a good thing. The only downside is the social repercussions over there, which is mostly going to be related to unrest, political uncertainty, and some, probably some violence related to some protests. It ended up not being nearly as bad as we expected, and at this point, it looks like that's going to taper off. We're going to get a period of kind of transition where everyone's going to be watching and seeing, is there anything crazy that's going to happen? And it's going to settle down. Now, a few crazy things could happen, but I don't expect it to drive the RSX price around too much. There is definitely room for movement and for political factors driving the price of RSX around. We want to be careful of that. But the trade itself is honestly looking very, very good, at least for my analysis. Let's take a look at the analysis. Okay, this is a spreadsheet that I do on all of these. What I'm analyzing is what's the risk of the trade versus the premium that we're getting in on it. In this particular case, I'm laying this out as an Iron Condor. I'm using a 28 strike short put and a 35 strike short call as our income generating portions of the trade. So I'm taking those two strikes and then I'm going 2 strikes out to do a protective trade on this. I'm buying a 26 strike long put, buying a 37 strike long call. These are all April expirations. We're taking a roughly 45-day trade on this one. A little bit longer than I normally like to on Iron Condors, but I think that there's some good chance for this thing to work out. Now, overall, that's giving us a great rebate, great credit on the trade. When you take a look at the amount of margin that you need to use on this and the rebate, we're making 36% on that margin. Nice thing about this is the large rebate actually cuts down the overall exposure of risk on this trade, and it gives us plenty of room to work for this trade to work out. Now, taking out any other factors, taking out any of the political risks, gaps, and things like that, just based off of our forecast volatility, which I put at 16%, it's actually higher than what is measured, higher than what's measured in our historical volatility. We have a 96% chance of this trade working out, break even or better. We have a 93% chance this trade is going to be hitting our max profits. So good possibilities that this trade is going to be going in our favor. I like that. The other thing I like is the expectancy. You balance out all of the risks and all the probabilities of where this trade is going to end up at the end and average them all out, take a look at it. The expectancy in the trade is still 32%. That's outstanding. I'll take that any day of the week. So once again, we're putting on an RSX, Iron Condor, expiration with the April monthly contracts, buying a long put at 26 strike, selling a short put, 28 strike, short call, 35 strike, long call at 37 strike. There's the data, there's the information. Highly encourage you to come check out Top Gun Options and our alert service. Got a lot of great things going on. Looking forward to seeing some new people. The hope that this trade is interesting for you, gives you something to think about, and I will talk to you again next week. Thank you very much.